Hello, everybody. Welcome to What Does the Chancellor's Statement Mean for SMEs? This is a free webinar hosted by Swoop. My name is Ian Hawkins. I'm the head of content at Swoop. And today we're going to look behind the headlines of Rishi Sunak's speech yesterday and figure out what it all means for SME owners. Before we get going, I'll do a quick bit of housekeeping. So if you want to ask a question, jump into our Q&A box. We'll be taking a selection of these through the webinar. If you've got any tech problems, go to the chat and I have colleagues standing by. They'll be monitoring that and they'll do all they can to get us visible and audible for you again as soon as possible. If your computer has a complete meltdown, don't panic. This is being recorded so you can catch up on it later. So let me make a couple of quick introductions. First of all, we have Andrea Reynolds, who's the CEO and the co-founder at Swoop. Hi, Andrea. Nice to see you here.
Hi, Ian. Good to be here.
And Kieran Burke, who is the Chief Operating Officer and co-founder at Swoop. Kieran, how's it going?
Very good, Ian. Good to see you as always.
Great. I would like to kick off with a statement that was from Siobhan Haviland, who's the Director General at the British Chamber of Commerce. And he says that business confidence is on the floor right now. And I just wondered, whether you two agree with that sentiment. Is it on the floor? Andrea.
Siobhan, where the British Chamber of Commerce are coming from is they carry out really phenomenal surveys across their membership. So they have to be taken seriously because they get thousands of responses every single time. I would say, like everything, you always have to have the general sentiment of the market, but within general sentiment, there are winners and losers. So overarching general sentiment, of course, confidence is extremely low. We are going through one economic crisis after another. We come out of a pandemic, we go into invasion of Ukraine, supply chain crisis, energy crisis. So, it's a very tough environment to grow your business or even survive. Having said all of that, there are businesses that are experiencing exceptional growth at the moment. So as the world pivots to different consumer behaviors, different B2B behaviors, you'll start to see winners and losers. So e-commerce, absolutely flying. Great to see hospitality, restaurants, etc. back open, flying again. But as I say, within that, you have Brexit, supply chain, etc. So manufacturing, engineering, import, export, very, very difficult times for these guys. But I would say we're seeing quite a high level of resilience amongst our customer database. And I'd say yes, while people confidence is low, there's equally head down, focus on growth going on.
What about you, Kieran? There's lots of new startups happening, aren't there? That doesn't say confidence is that low, does it?
Yeah, so from my point of view, I think the statement's a bit bullish in that, yes, if you looked at from the government side of things and you were looking at yesterday and it's a bit lethargic and there's a little things here and there. But if you're a small business owner, I think, you're not there to rely on what the government does. You in your own right, you've got precious time. But outside of that, we've had record numbers of startups sign up in the UK. You've had over 400,000. So they're obviously getting the confidence from somewhere to go and start their own business. So I think from one end of things, as Andrea has been alluding to, you've never been in a world with the COVID accelerator or even in the past 20 years where you've got this whole interconnected workplace at the touch of your fingertips. So as a small business owner or as a startup, you've never probably had more confidence to be able to transact and engage. Where the kind of, I suppose, lack of confidence comes from is relying on, say, the UK government to be able to go out and help you. I mean, from their perspective, they're doing absolutely everything they can to not help you when it comes to reaching that kind of wider audience in terms of locking up the borders and making it incredibly difficult to have new talent, particularly emerging talent, come into the country. So they're forcing you to think outside the box. So that's where it's frustrating. You certainly have a lack of confidence. But actually, if SMEs use their head and say, actually, I don't need to necessarily rely on that, there are other organizations, even from Siobhan Haviland himself, his own organization is pretty fantastic in terms of the networks and the membership, that the way it's set up, because that's where you get your local advantages. That's where you get your insights. I've been on the Wandsworth Chamber of Commerce, which is the local one to myself. And on that, you will get really, really good nuggets. What's going on in the industry? How do I go and apply for this thing? How do I get access to that? That's really where you'll get your edge. If you're sitting there waiting just for the government to go and do something for you, of course, you'll have low confidence, but the macro trends as a young business or as a startup are pretty much in your favor, and there's lots of opportunities out there.
My thing that I've learned today is that the startup loans have gone from being anything in its first 2 years to now any business in its first 3 years. So that is very news. That's a useful thing that people are going to take advantage of. I
think, yeah, that's absolutely brilliant, because I know naturally when these things come out, and I was quite zealous there, and some of my government bashing, and there is always government bashing that will go on, but there are some unbelievable programs out there, and the fact that extension is happening is absolutely fantastic. So for anyone listening to this and you're in your first 3 years of commercial trading, you absolutely should be looking at things like the startup loan scheme. It's so enviable when you look, of course, against any other countries out there. It's not something that's normally in any other country. And the fact that you as a director or any director in your business can get up to £25,000 to invest into your business, and then you can spread that over a 5-year period and have an interest-free period is fantastic, because it gives you that confidence to say, yes, I can go and invest in this website or purchase the stock to make it happen. So there are underlying things within the UK economy that are absolutely brilliant for young businesses to go out and get themselves up or allow them to get those early shoots of growth.
Okay, Marcel Shakatu's just said, what are these unbelievable schemes? All right, unbelievable is perhaps a strong word.
But I would argue, I think the startup loan scheme is unbelievable. You try and find another country out there that has a scheme like it. It's absolutely brilliant.
I think, yeah, like you do have to work hard to find these, which is why Swoop exists. And Swoop started its life with a startup loan. But I think, Marcel, we'll go through some of these and we'll touch upon them as we're talking about maybe what was announced yesterday. Also, what wasn't announced yesterday, but actually is live and in operation, and things that are happening in the government grant scheme landscape, as well as the tax credits and benefits as well. There are a few, but I understand Marcel's cynicism. It's hard to find them.
I was just thinking about the RLS. We've just gone through a big RLS change, well, at the beginning of the year, haven't we? And how's that affected the landscape?
Yeah, I mean, RLS, let's not use acronyms, etc.
Okay.
The recovery loan scheme, it's just we're used to it, others aren't, and the government announces another acronym every single day. So the recovery loan scheme is, I'm sure anybody who was trying to keep their business operational during COVID either would have looked at the bounce back loan scheme or what was known as Seabills, the coronavirus business loan scheme. And the recovery loan scheme is an extension of that. It just keeps changing its name. It was EFG before it turned into RLS, but it's essentially a scheme where a lender otherwise wouldn't have had the security, wouldn't have seen enough security on your balance sheet or for you personally to be able to guarantee a loan. And so the government steps in as your guarantor, up to 70%, I believe it is now, of the loan value. And so that helps in terms of the cost of the loan, the ability of lenders to give you that loan. And it's still an in-demand product. The great thing about the recovery loan scheme, in previous iterations before COVID, it was only allowed to be distributed by the banks. And so distribution wasn't great. Whereas now it's being distributed by lots of non-bank lenders. So we really are getting that scheme going. It's always been a great scheme. It's just the distribution wasn't there. So yeah, still going strong.
And I think the thing about this scheme that's changed the game slightly for SME lending is you can get up to £250,000 under the scheme without a personal guarantee. Prior to EFG, Seabills, RLS, whatever you call it, coming into play, it was very hard for a small business owner to be able to get access to truly unsecured lending. So it is causing a bit of a shift in how alternative finance providers think about providing capital. So while the scheme will end on the 30th of June, and as Andrea rightly points to, there will be other versions of it out there, particularly in kind of export related activities. It will change the dynamic at how lending goes out to SMEs, because they've now got used to being able to get up to that sum of money without giving a personal guarantee. So it'll be interesting to see how that dynamic plays out, but it's certainly a huge advantage, I think, for business owners to have that level of comfort to be able to get that size of quantum without having to put the personal guarantee down.
Okay, I've got an audience question here, and it's sort of pertinent to what we're saying, but the question is what support is out there to survive the next 18 months? And I guess the answer is find out now. Look at the next 6 months rather than the next 18.
Yeah, I'll just do a very quick synopsis. If you are recovering from COVID, the recovery loan scheme that we've just mentioned is the number one scheme that the government is relying upon right now to help businesses with their cash flow. If you have previously received a bounce back loan or a Seabills loan, you're still able to go for the recovery loan scheme. So that's one thing. The second thing also is, but it's on a first come first served basis. Every region in the country has what's known as a growth hub, a local growth hub. Those growth hubs have all received pots of funding to be able to distribute as recovery grants. So it depends on your area that you're living in and your business is trading in, whether there are still grants available. Once those funds deplete, they go back for more funding. So that there's those types of funds. So it's always good to look at your local growth hub. There are other things, small amounts, but they're still useful to know about. Like, for example, Help to Grow scheme. If you're paying up to £5,000 for a subscription for a software at the moment, you could get that subsidized by the Help to Grow scheme. So that again, it's £5,000. But it's another £5,000 saved on your bottom line. And so there's all these types of small schemes, like, for example, if you're trying to decarbonize your building that you're trading from to reduce your energy bills, there's green vouchers available for 5,000. So it's small amounts, you piece it together, and that's how you look to recover, in addition to the larger amounts, whether it's lending, or if you're a business that's looking to grow, investment might be an option for you as well. So just depending on your growth trajectory. But that's kind of how you survive these times. We've survived these times. I survived it from 2008 before, and it's not a quick fix. It's all these small amounts that you piece together.
One thing I would definitely recommend looking at, and it's not an easy thing to go down, but I think it's worthwhile challenge. Innovate UK obviously run a lot of the grant-based programs in the UK, and rightly so. Many business owners will say, well, they've no relevance to me. It's very much driven to a minutia or a very specific thing like AI or robotics. But if we look over the last, say, 2 years, once a quarter, they've basically been releasing these smart grants, which there's a total sum pot of about 20 million, of which, if you're applying as an individual business, you can kind of apply up to £250,000, of which you can get about 55% of that amount. But it is a grant application, so you have to think through what it is that you're doing. Is it innovative? But there's no restrictions in terms of the age of the company or the sector of the company. So it is an opportunity to go and get other capital into your business. But what it will also train you to do is open your eye to how does the grant scheme work. And what Innovate UK do is they'll always give you feedback on your application. So when you do submit the application, you'll get everything back, including your score, as well as 5 judges, all their comments and on your questions. So, okay, you might not get the grant. You've gone through the experience of understanding, how do I write a grant proposal? You get 5 versions of different feedback on your idea and your execution of that proposal. So it puts you in a much greater position, even if you didn't get the grant, to think about it from a future state of mind. So again, in terms of the here and the now, it's something that I'd be actively kind of bookmarking and checking on a regular basis.
I was talking to some of the equity team that we have here, and they said that even if you're just looking for equity, getting a grant is also a really good way of saying that you've got a legitimate really good idea behind your business, and it makes equity a little bit easier. I think that's answered a couple of questions. We've had Kathy Caton, who's saying that she's dealing with all kinds of challenging shizzle, from supply chain issues to Brexit complications. She's behind Brighton Gin, so she's been getting us through lockdown. And also britishmarketplace.co.uk, they've been talking about grants and funding. So that's useful stuff. Thank you very much.
Just on that, interesting, just the relevance also, just to mention to those businesses. In the past, we would have had traditional lending, which is term lending. Or invoice lending. And that was how we all financed our cash flow crunches that we had. But the emergence of what's known as revenue-based lending is now really a brilliant tool to help your cash flows, but also giving you that remaining flexibility. So it's based on you receive a facility, a credit facility, but you only repay it as a percentage of your revenues coming back in. So for marketplaces like the British Marketplace, for consumer goods like gin, all of these types of businesses, this could be a solution where you're thinking, oh, I don't know if I want to take on this facility, but you know your money's tied up for longer because of supply chain issues. But it's based on your sales coming in, and then once you draw that back down again, you can get a higher facility. So a lot of businesses in that space are going down that route. We have a number of the providers on Swoop, but that is one we're seeing in addition to the recovery grants from the local growth hubs.
Yeah, and Kathy,
sorry, just see Sachin wrote in a question there, and the question was, for anyone can see, there's any support for e-commerce and real estate funding for SMEs. So Sachin, essentially what Andrea is talking about there is perfect for e-commerce. What those revenue-based lenders are doing is they're looking at your Shopify, your Amazon, your Stripe, your Magento, whatever that mechanic you're using to sell online, using that data, and then they'll give you an option. The rates normally range from 1% to 10%, depending on the sweep. So the way the sweep works is they'll take a future amount of revenue off your revenues to pay off the advance that they're giving you. So that it could be anywhere between 10 to 30%. So it's up to you, between yourself and the lender, to work that out. Naturally, on the real estate funding side of things, would encourage you to be very proactive in this space at the moment. We do know, obviously, with interest rates going to be continuing to rise consistently for the foreseeable, it's something that I would strongly recommend getting in touch with your kind of commercial mortgage brokerages to talk through what your different options are. Naturally, when you're looking at real estate funding, you don't necessarily have the constraints of the unsecured funding side of things. It will be a lot down to the property and the person kind of guaranteeing and behind the loan and the various group structures. But with rising interest rates in that space, I think it's very important that you look and look into that market now and assess what your options are to hopefully lock in as long a rate over a longer fixed term period as you can.
I would also say, just on real estate or infrastructure, etc. If you are carrying something out which leads to a development within your local authority area, or you're doing something that's an investment into the region, if it's that kind of real estate investment, then your local growth hub, your local enterprise partnership that it's known as, can come in as part of the investment as a grant, if it's seen as creating jobs or improving the locality. So it's about combining, just for everyone to know that if you're getting a local grant, it's making up part of the project cost, probably about 30%. And then you come along with the private sector funding for the rest of it. So that's another way to look at it.
I just wanted to jump in and say that Kathy also says she's got a Seabills, and we've heard a lot about customers coming to us with one product and walking away with another and doing a refinance. How does that work?
Yeah, so if you have a Seabills, you may have entered into a rate that you may actually be able to improve on that rate now, because you've survived COVID, you're still trading, you're repaying that facility. or you're probably up to the time where you're about to start making repayments. You might have had a capital and interest rate repayment holiday. So we are doing a lot of reviews at the moment for businesses to see if we can improve on that rate. It could be you want to improve on the rate, but also increase the amount. It could be that a recovery loan could sit alongside your Seabills. So if you've maxed out on your Seabills, but you're still looking for further improvements on your cash flow and you need further injection, that could be an option.
Okay, I've got Aidan Stevens here who says, hello, I'm in the hospitality sector. Across all costs, energy, labour, food and other things, they will collectively increase by 12% of revenue. Is the expectation that companies will absorb profit reduction or borrow instead of pure retail cost increases? He says, personally, I would rather increase prices, but I'm nervous that the marketplace will struggle to absorb a 12% price increase. What's the answer for someone like Aidan?
Yeah, I think yesterday's budget was a real bit of a kick in the teeth for someone like Aidan. I mean, there were some alleviating pieces on business rates, so 50% of business rates. So for if you had a restaurant or bar, say 28,000 was your rates, you're saving something around £5,000–6,000 a year. On the energy side, I mean, there is really nothing to be said there other than it's an absolute killer for businesses like that. I think part of it will be part price increase and part absorption. I don't think you can fully absorb 12%. Which is all why it's feeding into soaring inflation. It has to be passed on. A big chunk of that has to be passed on. He's not a charity, he's running a business, has to try and survive and make a profit.
Yeah, I mean, I just think if I was Aidan, the bits I'd be frustrated about, yes, okay, there's a 5.5p reduction on the fuel side of things, but it's the long-term situation. Like Rishi in his speech, like one bit I was like, oh, kind of connect here. You're kind of being a bit honest. Like, we're not as innovative, we're not as productive as say the French or the Germans. Don't really know what we're going to do about it. We're going to expand R&D slightly, but there's no kind of lateral thinking about like this energy thing isn't going to go away. Okay, obviously it's exacerbated because of the Ukrainian war at the moment, but like, what's the longer term here to be able to deal with this? Like, you can see other countries rethinking their nuclear strategy, because if you have more of a nuclear strategy, you can potentially control energy a lot more, and it can be a lot more efficient. But even things in terms of like what is he putting research and development into to game change and think this is something that I felt was completely lacking. The other thing is kind of, I briefly touched it on the labor side of things. Okay, there's some positives there where the lower income will get an extra £330 in their pocket, which means you could potentially offset some of those hyperinflation, I would say, increases that's happening in the service industry. Like, it doesn't matter where you are in the UK, you go down any high street, you just got staff wanting on every shop window, because essentially, because of COVID, Brexit, a myriad of different things, we don't have the workforce in there to serve the service industry. So you can no longer pay the same rate that you were paying in 2019 as you would pay in 2022. But then you have no way of getting different types of workforce into the country unless you're paying them a base rate of £30,000, essentially what Priti Patel says. So there just doesn't seem to be any thinking outside the box within that hospitality sector of you need to employ quite a lot of people en masse. It's high turnover of industry, so there has to be ways to think about this a bit differently, other than potentially locking up your borders and reducing 5p now, but probably paying for it later. So my frustration would be, okay, yes, you, as Andrea says, you can do a mixture of things in terms of managing that price thing, but what I would want from a macro trend is my government to be thinking more in the longer term of how do you solve these problems of energy and labor that directly impact my business.
I think it's important, sorry, just to call out,
Sure.
whether it's relevant, it's relevant to Aidan, but all of us as SMEs. Another small piece of like good news, the increase in the employer's allowance is a tangible saving for us all. So if your national insurance bill is less than £100,000 a year, then you're eligible for that increase. So everyone's probably doing real-time processing of payroll. So you'll get that saving every single month. So it used to be £4,000 of an allowance. Now it's gone up to £5,000. So hopefully that's another £1,000 saved off your NI bill. As I say, the business rates being the other main one. And I would say it's worth, again, I talk about your local growth hubs, but these are the guys who are distributing this. It's worth getting an energy audit done or applying for getting your energy audit done, because they are supposed to give you a voucher. They have pre-approved people to come in, do an energy audit, and they pay them to do that for you, just to assess, are there any other areas that you can start to cut your energy bills?
I just want to go back to something that Kieran said a few moments ago. He's talking about R&D tax credits. And I know you're a big fan of those, Andrea, and I just wondered if you could just give me your, because the rules on those have changed as well, haven't they?
Yeah, and I would say to anyone, if you have had to, a lot of businesses don't realize, they think, oh, R&D, they think technology, they think energy. A lot of businesses are carrying out R&D and they don't know what it is. So if you are trying to solve something where there isn't something in the world at the moment that solves that for you, and you have to go off and prototype and build it or build software, then that's considered research and development. Research and development, the general rule of thumb that I will give you is whatever your spend is on that. So you can look at everything from allocation of people's salaries who are spending time on it, paying contractors, and I'll come back to that point in a second because it's come up, software license costs, etc. All of that can be included in your R&D tax claim. Now, let's say you are loss making. So you get to the end of the year, you're submitting your tax return, your corporation tax return, you're loss making, and we've got a claim that you can make for your R&D spend. You will get, so let's just say your R&D spend was allowed £100,000. We uplift that by 130%. So it's £130,000 that we're looking at. And then what they do is they say, if you want that back in cash, we'll give you 14.5% of that total 130 back. If you're profitable, we'll just deduct it from the entire amount from at 19% from your tax bill. It's a phenomenal scheme. Swoop itself has survived many cash crunches in its lifetime because of us receiving our R&D tax credit claim. It's really not difficult. We process them, we create them for our business customers. So it's a really good scheme to think about. Now, I know there was a question on contractors. The rule around contractors for R&D is that, so they're not an employee of yours. So how you value those is 65% of your spend on those contractors is allowable. So not the full 100, it's 65%. The rules that Rishi announced yesterday, albeit we all knew them from months back, was from April 2023, so not affecting this tax year. From April 2023, he's going to allow us to include things like cloud costs, so data storage costs, etc. The takeaway he's putting in place is it's only for spend in the UK. Now, most of us are paying for contractors in Brazil, Turkey, wherever. We're probably collaborating with other countries. So he's reducing that, but increasing on the storage side of things, cloud storage. But R&D tax credits, I would say any business that's on here that thinks they might have some R&D going on, do get in touch.
There you are. That's Andrea, who's an R&D tax credit evangelist. Gizem Akgun has just said, we would decline for a recovery loan. Is there a way to increase the credit score shortly to reapply before the same loan? Should Gizem be reapplying for the same loan or looking elsewhere?
No.
Or what? Right.
Don't reapply for the same loan, but don't be disheartened. Get in touch with Swoop, because each recovery loan scheme lender has its own criteria. So you may have been rejected by one and the criteria of another is completely different. So you might be accepted by another. If your credit score has been damaged along the way, don't feel intimidated. This happens to everyone during COVID. So we can help you actually repair your credit score. Or we can look at it and say, well, we know we have other lenders who will accept this credit score. So just because one says no, doesn't mean the others will, but don't go and multiple apply directly yourself, because you're hitting your credit score. If you let someone like Swoop do it, we know before we put in any application whether it has a high chance of success or not. So that is the best tip I can give you, is never apply to lots of lenders at the same time. Do it through an organization like Swoop.
The only thing I'd just quickly add to that is, first and foremost, just getting awareness of your credit score, whether it's through Swoop or someone else. It's now very easy to understand what your credit score is. That you can understand how you're being rated, and you can get things like a Delphi score, which will basically aggregate all the major credit score agencies like Equifax or Credit Safe or Experian, so that you can understand how you work across all of them, but ultimately can see where the drivers are that might lead you to be rejected. But also, again, Swoop or anyone else, not to plug ourselves, but what we would hopefully try and give you an overview is, what is the right type of lender for you? Because there are a number of fintech lenders out there that are very much computer says no, in terms of it's very algorithmic driven. And so we know if the score is not going to mean a certain thing, it's not going to work. So as Andrea says, if you're hitting loads of that, then you're just going to negatively impact it. But there's plenty of other lenders out there that will think more from an underwriter perspective of credit, looking at the wider trends, not just on the quantitative side of things, but also on the qualitative side of things. So it's putting that business case together. So it's really important to understand, first and foremost, how you're ranking from a score perspective. But when it does come to who to go from that loan, which of the providers is the right fit for you.
Yeah, and there is a credit passport tool on the Swoop website as well. And if you go through that, it will give you an idea of what your credit score is and ways to fix it as well. What else have we got here? Oh, Aidan Stevens has come back and said, as an FYI, energy audits are actually very effective. We've claimed about £20,000 from them in the past and saved unquantified OPEX money. Operational excellence, if you need me to bust that jargon there. Thanks very much indeed, Aidan. What else have we got here? Kathy, do you know if, Kathy Caton, do you know if there's any leeway with Help to Grow Digital to include specialist industry-specific software that's not currently on their list?
Oh, I know.
Yeah,
it's a real bug there.
And like, you want, Kathy, I'm sure we'd love to say, the problem is that when I say computer says no, when it comes to those kind of things, if it's not on the scheme and it's not in the, it's very hard to work around that. I don't know, Andrea, have you any wizardry?
My only other, if it's me and I'm going, oh, I can't go down this route, then you go back and you say, okay, I'm not sure, Kathy, where you're based, but every local growth hub, I keep talking about them, they usually have what's known as a revenue-based grant. And what that means is, let's say you need to buy that software and it's, I don't know, £10,000 or something. The revenue-based grant would contribute 30% and then you pay the rest. So and what you're doing there is proving if you had that investment into that project, you would be able to increase your revenue and therefore hire more people. That's the only other sort of leeway I would be able to come up with in terms of trying to finance your software, even though it's not on that list of pre-approved vendors.
Okay, we have an anonymous question here, which is, what is the support for education service related micro businesses in the ed tech sector? This is again going back to inflation costs and what grants are available for that sector specifically. Do you know anything in particular?
Again, just to give everyone a quick synopsis of how the government thinks about grants. They think about it in two ways. One is, how can they intervene in a region to improve economic activity? And then the other is, how can they generate more innovation in a country through intervention? That's kind of the two things that they do. And so they don't really, like on sector stuff, like Kieran was talking about earlier. Innovate UK, for example, would look at sector specific challenges and they would announce grants based on that. But over and above that, it's normally back to your regional, local growth hubs, local authorities who look at it from a generic perspective of, you know, what's going on in your business, what do you need to recover and grow and create jobs. That's kind of how the whole landscape works.
I would just on the tail end of that question, is there any IT grant for equipment, hardware, software investment in the business too? Now, I don't know what specific equipment or you're looking for, but certainly all the big software houses on the storage side of things, so your GCP, your AWS, and your Azure. So Azure is the Microsoft, AWS is the Amazon, and GCP is Google. They all massively encourage, if you're a new customer or a startup, and then in terms of giving out free storage hosting fees over a long period of time. Obviously, their strategy is to get you addicted to it. But if you're looking to grow your business and get some improvement into your cash flow in the short term, it can be really, really beneficial. We ourselves have benefited from the Microsoft from Startup program, where our Azure bill had been eradicated over a period of time. But now, obviously, very welcome when Rishi said that we'll be able to get that contributed to on the R&D going forward. But I would say if storing and hostage is something that's starting to niggle on your cash flow perspective, I would definitely be reaching out to AWS, Azure, or GCP, depending on who your provider is.
Okay, that's great. Thanks very much indeed. Going back to Rishi and his budget statement, he said that government's going to cut tax rates on business investment at the autumn budget. So he's giving us a long summer of saying, look, you've got this incentive that's way ahead of you. Do you think that's going to affect how business investment works over this year?
I think the super deduction has generated interest in investment. It's hard to tell whether the super deduction generated interest or whether it was just a recovery of the market. So there was a massive decrease in asset finance investment, anything in asset investment during COVID. So super deduction came along. The capital allowance was always there anyway. So it is a very generous scheme. And it is, you know, the capital allowance scheme that they are extending out again. So it is worth looking at. It's kind of similar to R&D. You kind of can say it's like that 20% mark that you're going to get back. I'm not going to take you all through the ridiculous calculation to get to that, but that's a general rule of thumb. So that's useful to know about. Like at the end of the day, this spring statement, he had about 20 billion in the coffers to play with. He announced schemes that will cost him 10. So I'm assuming in autumn he's holding back and he's gonna spend the other 10 when we get to the autumn statement. So I think he's just probably slowly but surely going, I'll make, you know, there will be a further crisis by autumn, so I'll need to hold some back.
That laughs does it all, Kieran. It's political theatre, isn't it?
Well, no, I mean, yeah, it's, I mean, at the moment, I suppose if I was in his shoes, I can understand why you would hold stuff back, because it's pretty crazy out there. So you definitely need to hold things back. But I would welcome that 10 billion if it does emerge come October to be put into back investing in businesses. And I think he did say something that was quite true in his speech yesterday, where particularly in the SME space, there isn't as much investment back in on the staff side of things as it may do in comparison countries. But the reason it's stronger in comparison countries is driven from a governmental level, where they're putting levies, they're putting programs out there to put back into it. Because from a small business perspective, it's not that they don't want to invest in their staff or their teams. It's very much a cash flow side of things, of being able to, like Rishi's doing, having something in there to make sure that there's lights on at the end of the month. So if he's now got whatever the 6 months leading up to it to think it through, would certainly welcome that 10 10 billion going into investing into businesses.
Okay, so, just another couple of questions here that have come in, which are, is there support for e-commerce and real estate funding for SMEs? I think the quick answer to that is yes. We've got commercial mortgages and e-commerce, which is all on Swoop. So you're probably the best bet is to look around there as a sort of first port of call. Marcel Chacat has come back to us and said, could you please name any grants or government-backed funding for acquisition financing?
Yeah, the recovery loan scheme, we have acquisition finance lenders who will lend under the recovery loan scheme. So, and they will also look at the business you're acquiring as well as your business itself. We have an amazing acquisition finance team. So Marcel, if you want any information on that, do get in touch. And I would say that is useful because you can get 2 recovery loan schemes, for example, where you take it up to the 250, so you're not impacting on the personal guarantee side of things. But yeah, plenty of lenders in that space. In terms of any sort of grants or whatever, that will depend on where it's located, what it's doing, are you creating jobs, etc. And I see a question just on the Innovate loan there. Ian, do you want to read that one out?
Yeah, sure. So Innovate have just released an innovation loan, which is running, so this is Tony Lee, so he thinks it's running around about 3.7%. But yeah, Tony's running a deep tech business where he won't be generating revenue until about a year or 2 later. So is there any scope to delay repayments until the business is revenue generating?
Yeah, just on that, Tony, we ourselves have applied for that loan, and we also obviously help a lot of our clients and get Innovate grants or Innovate loans. And the general rule of thumb that everyone is experiencing from the Innovate loans is they're much harder to get than the actual grants. So if you're not revenue generating and you're going to put your effort into getting an Innovate loan, I would say see if there's an Innovate grant first, because you're going through 2 phases of approval. You're going through, do they believe it's innovative and does Innovate UK want to support it? And then you're also going through a credit committee to determine whether you have the financial feasibility to repay the loan. So you will, it depends on whether you've received investment or not. Do you have other capital in the business to repay the loan until it's revenue generating? I remember going through all of those questions myself at the time. Kieran, do you remember anything else from our experience of it that might be useful for Tony?
Outside of that, I think it was very similar actually to a grants-based application, so that's why it's a bit different. So I think I know it's a bit Ron Seal, but the innovation bit of it is so crucial. Obviously, there's the number side of it of like, can you afford this loan? But what I was struck from the application itself was how much it was like an actual grant application. So while you're thinking through an economic proposition of I can afford this as a 40 billion business and that will generate income, you also need to be constantly thinking about the innovation angle of it. And that's just as important as the number side of it. So what are you doing that's going to be as adding jobs or doing something differently that wasn't there before? And I think for me, the bit I took out was just to make sure that you are answering both aspects equally, was probably my key takeaway from it.
Yeah, I do know that you can negotiate things like repayment holidays for the first 6 months, etc. But ultimately, they're going to be looking at your assumptions on how you're going to repay that loan, and they will be expecting you to be able to service the loan probably through equity investment while you're building out before you're revenue generating.
Actually, Andrea, because we've only lip service equity investment, and it might be worthwhile just quickly talk about some of the schemes very, very quickly, and conscious as the end of the tax year. And these are some of the positive schemes that are out there and available to businesses. So the 2 principal schemes that everyone should be aware of if you're thinking or going down the equity route are the Seed Enterprise Investment Scheme, otherwise known as SEIS, and the Enterprise Investment Scheme, otherwise known as EIS. What this means to you as a business is similar to the startup loan scheme, you have a clock that starts ticking when you make the first commercial sale. As soon as you make the first commercial sale, you've got 24 months in which you can raise money from equity under the SCIS scheme. As a business, you can raise up to £150,000 that can be put into your business from an equity, and you could use that to match fund against a grant or match fund against a lending side of things. But why is it really interesting, and why does it kind of drive innovation and good for the economy, is because the people who are investing in your business, they get taxed back on that investment. So if I was to invest in your business under SCIS and I was to give you £10,000, I can get £5,000 back from the government for my investment. And then if for whatever reason that investment wasn't to be successful, I could get a further 25% back. So in effect, I'm only risking 25% of my capital. The same can be said for the EIS scheme, except instead of 50%, you can get 30% back of that original investment. And as a business, you can raise up to 5 million under that scheme. So when you are looking at things like innovation loans or any kind of grant-based schemes, it's also worth knowing where can I get top-up money, because often you'll need to invest alongside that grant. And there are lots of pots of money in the equity space, particularly this time of year, because lots of individual investors, angels, and funds under the SCIS and the EIS scheme are looking to deploy that cash. The reason they're looking to deploy that cash is because if they get it out by the end of this tax year, they can claim it back within the start of the new tax year. So they're mitigating how long they have to take before getting that tax back. So if you are looking at investors, I would encourage anyone to look at those two schemes in particular, because they're really advantageous, and again quite unique to the UK, and something that works very well in terms of getting early stage money into new businesses.
Awesome. Thanks very much. And I've just got a quick question from Gizem Akgun, who says, what would be the steps to work with Swoop to apply for the recovery loan? Who should I get in touch with? Well, we have the Chief Operations Officer here who's going to answer that with an extraordinarily complicated process, aren't you?
Well, hopefully simple, although you might message me and tell me it was an awful experience. But if you go to swoopfunding.com, you'll be able to sign up and create an account for free, and select the why you're looking for the loan. It could be to purchase stock, expand your business. And what it will do, will ask you a series of questions to understand kind of the need for the loan. And from there, what we'll be able to do, both from a platform point of view and a team point of view, is understand the right products for you relative to the recovery loan scheme. And then you'll get to meet some of the wonderful people within our debt team at Swoop, who'll be able to kind of chat you through kind of, maybe it's looking at kind of your credit position right now, or talking through some of the recovery loan scheme providers and chatting through which ones might be the right ones for you. And they can also assist you on what are the right documents. You'll be able to see in the platform what documents you'll need. It'll be kind of standard things like your management accounts, your bank statements. Often with these schemes, you'll also have to think about forecasting. So what is my business going to look in 12 months time or 24 months time? So you might need to put a forecast together as part of the application, but each of the scheme providers may have slight nuances. But first step, swoopfunding.com, create an account, and hopefully you'll find an easy to use process, and one of our guys at the other end of the line should you need them.
And if in doubt, Andrea has just put the email addresses for a couple of people in the chat box. So there's reese@swoopfunding.com for any loans that we were discussing today, and for Innovate UK, Kerry at swoopfunding.com. We're coming up to the end of our session, so I think that what I'd like to do is just close out and say, if you've got any final words, Kieran and Andrea, what should your priority be as an SME for the next 6-12 months?
Yeah, I think as entrepreneurs, we're always eternally optimistic, aren't we? So my take on the insanity of the world we're living in right now is, with all of this change and disruption comes opportunity for SMEs, for small businesses starting out or growing, because what was the status quo is gone now. So people start to become more innovative and more open. So, you know, if you were finding it really hard to do business with, you know, larger players or whatever, you should start to see more opportunity coming your way. For startups as well, we're all seeing new ways of living, working, being. And so that's why we're seeing 400,000 new businesses starting up. So I think we're over the worst of trying to figure out Brexit impact. Unfortunately, it is impacting lots. One positive I will tell you about Brexit, guys, is now the government has a new definition for SME. And so especially for those who are applying for Innovate UK, you will be glad to know in the past, under the EU rules, you were only allowed to get state aid up to 250,000. That's now gone up to 336,000 for Innovate UK. So there are a few little glimpses along the way. So I would say, yeah, like all of us, it's just resilience, keep your head down. Make sure you're aware of anything that you're eligible for, anywhere you can improve your bottom line or improve cash flow. That's what we're here to do for you, is to make sure you're getting the maximum available to you.
And Kieran, what's your look ahead for the next 6 months?
Yeah, I think I'd just add to what Andrea is saying there about the bottom line. I think you need to be a lot more savvy over the next 12 months. Like there's the talk of inflation of 6.2%, but that's not real inflation. Like inflation is something a government makes up, like, and they can control it, they can substitute something for it, they can say something's less cheap this year. So absolutely, the rate of inflation is way higher than 6.2%. So what I will be doing is looking at my cost base and understanding what it is that I pay for, what do I use. And as we were kind of alluding earlier on, we're in an awesome new world where you aren't restricted to a geographic boundary. There's so many platforms out there, whether it's email, internal communications that you can use for free, that you don't have to have a course for, and there's lots of different things for associations. Do you need as much office space as you once did before? I think we need to be really, really savvy over the next 12 months, because we're in this really potential high inflation rate, purely driven a lot by that kind of lower income age or wage bracket that's completely changed from what it was to what it is now over a tiny period of time. And we're only going to start seeing the impact of that over the next 12 months with really big price changes. So I'll be looking at my bottom line right now and seeing what can I substitute, what can I change, like the government do when they come up with their inflation numbers, so that I'm in a much more resilient place going forward, and I can grow my business at a rate that will hopefully surpass any inflation figure they give you.
Okay, great. Well, I think that brings us up to time. So it just remains for me to say thanks very much indeed to our panel. We have the Swoop's resident petrol head, Andrea Reynolds, who's presumably you're off to fill up your tank with your nice cheap petrol now, and Swoop's resident cyclist, Kieran Burke, he'll be pedaling back home after all this. So thanks very much indeed. Thanks very much indeed to all of you for tuning in and giving us all your questions and things. That's incredibly useful. This is available to watch and share later. So if you know anybody else out there who benefit from watching this, by all means do pass them the link when it comes out. Until next time, my name's Ian Hawkins. Thank you very much indeed for watching, and we'll see you again soon. Bye.
Thanks so much.